Good afternoon, traders and investors. Will back here with another one, coming to you with a Sunday video, guys. And it's that time of the week again where we go over the top 5 options plays for the upcoming week. Hopefully you guys are having a very nice weekend so far, and hopefully you wrapped up a beautiful week of trading last week in the markets. Now, in today's video, keep in mind, all of the options plays are going to be for selling options, more specifically for selling put options as part of the larger wheel strategy that we like to run on the channel. Why do I love running the wheel strategy, and why do I do it week in, week out with over 80% of my trading capital? For 3 very key reasons. Number 1, it's a very easy strategy to learn, thereafter master, and also scale up or down. You don't have to take a tremendous amount of risk with this strategy. It's a fairly low risk strategy, and as a result, it's very easy to scale it up as your account size grows. Reason number 2 I love this strategy, guys, is because it's very low time management, about 15-20 minutes a day, meaning that it's a pretty good strategy if you have a full-time job, if you're traveling, or if you just don't have that much time for the charts on any given moment. And reason number 3 why I love this strategy has to be the consistency and the very high win rate, of course, provided that you respect all the strategy rules that we will outline in today's video. Speaking of today's video, we have a few things to look into. Number 1 is going to be an outlook for the week. What do we have in terms of volatility catalysts for some macroeconomic events, maybe some earnings, and also how are the charts shaping up leading into the last week of September and the beginning of the first week of October. So we'll do that in section number 1. Section number 2, I'll be going over the rules of the strategy very briefly, but for an extended view of the rules, I will leave you a link down below in the video description where I go through them more in detail. And then third part of the video, of course, which is everybody's favorite, is the top 5 options plays of the week. We'll be looking into those, why I like them, what levels we're looking into, and thereafter giving you guys 10 bonus plays as well. So make sure you stick around to the end for those bonus plays too. So it should be a very fun video, as they usually are every Sunday. Let's jump right into the action, shall we? So number 1, in terms of the expectations for the week, we know that last week was a bit of a choppy week, decent pullback from the all-time highs on the SPY and the QQQ. So, leading into this week, what do we possibly have on the table? Well, if you take a look at the macro events real quick, you will see that on Monday, just a bunch of Fed speakers, and on Tuesday, that as well. However, we do have some pretty important jobs reports all throughout the week. Tuesday, we get the JOLTS jobs openings, where we see how many jobs are available in the economy. This number has been trending down over the past 2 months, and since we know the labor market is front and center in everybody's minds right now, all of these jobs releases this week probably will be the determining factors whether or not the market's end red or just continue on to the green. Now, this one's a big one, but then on Wednesday, we get another big one, ADP employment, which is otherwise known as your private employment payrolls. Supposed to come in at 30,000 jobs. Now, last month we had 54,000 jobs, and we know, especially with the revisions that we got last month, well, it's a very tight labor market. Not much firing, but also not much hiring and not much net new job creation, which is largely the reason that the Fed is currently embarking on a quite accelerated rate cutting path, with another 2 interest rate cuts planned to be had before the end of the year. So that's going to be another big one to pay attention to. But then the biggest one of them all, as per usual, is going to be the non-farm payrolls on Friday. You might remember what happened last month. There were some very heavy revisions, and the number came in fairly soft. Last month was only 22,000 net new jobs added to the public sectors of the economy. This month, we're supposed to get about 39,000. Now, similar to what we were kind of saying last month, in the event that this number comes in too negative, well, obviously, it's really not going to be good for the markets at all. However, if it comes in roughly in line or slightly negative, the markets will probably take that in stride, because it will mean that the Federal Reserve's interest rate cut path that they outlined in their meeting 2 weeks ago is warranted. If this number were to come in way too hot, like 100,000 jobs, well, you might think that that's good news, but the market may react in an adverse manner to that, because then it brings into question whether or not the Fed will actually have to cut rates in October and possibly even in December. As we know, they've been very data dependent. So the volatility this week, of course, will be all about the jobs market, so keep all of that in mind. But if we do see some very nice pullbacks, I think it's a very good opportunity to be looking for some dips on our favorite stocks. And what better strategy to use than the short put wheel, essentially, whereby we are selling put options on our favorite companies far under the market into support levels. In the event the volatility brings those stocks into those levels, well, we will be buyers. And in the event it does not, we will just get to collect the very juicy premium. Now, couple that with the fact that we don't really have much in terms of earnings this week at all. Only really Nike. Now, Nike, of course, is going to probably move about 6-7% on its own. However, there's a lot of sympathy plays associated with Nike. Not only other shoe companies, but also other apparel companies. And we know they haven't been having the best of times, especially since the April tariffs were released, of course. So Nike could move its own sector, or rather niche of the market, but I wouldn't say that that was going to pour into the rest of the market overall. So this week, largely no earnings. It's mostly going to be focused on the jobs numbers all throughout the week, Tuesday, Wednesday, and thereafter on the Friday. So moving into our technical analysis portion of the video, well, you might have guessed it. Who is in control? Well, it is still your bulls. Pay attention though, because we are fairly close to the line in the sand level. 654 is your daily higher low. Now, that being said, guys, we're very close to all-time highs, and we know we're ending the month of September. Now, this has been a very strong September. Usually September is a lot weaker than this, but towards the end of the month, which is what we've been seeing in the most recent few days, we have had the sell-off, and that weakness could potentially continue into the early stages of October before we start to mount the post-earnings rally that sometimes comes at the end of October, but then does persist into the December period. Usually Q4 is a very bullish time for the market, but we do have to get through that early October seasonality first. That being said, the bulls are looking quite good. In the event we lose this level for ever which reason throughout the week, probably because of some macro releases, well, just keep in mind, guys, the bulls are in full control here. Even if we get the daily downtrend, couple key levels to watch out for. 650 down to 645 is your first support. And even if we drop a bit more than that into these early stages of October, the bulls have a lot of space, and we still control the beautiful weekly uptrend right here. You might just be looking for a weekly higher low. So we're not expecting a tremendous amount of damage this week, but there could be a lot of volatility. That being said, I still think it's a good buying opportunity because the bulls control the higher time frames, and for the most part, economic data has been good. So unless you really get some net negative jobs numbers this week, like if your ADP comes in actually negative to where we're actually net losing jobs, or rather even the non-farm payroll shows the same thing, then the market's probably not going to like it, and that's when you might just go for your extended weekly consolidation move. But the bulls still have a lot of room, and they still have a lot of confluence down here. Beautiful support on the SPY with the 12 EMA, and the same thing can be seen on the QQQs as well, to where it's a very nice weekly uptrend. We're working with a lot of space right now, so they would need to put in like more than a 4 or 5% decline to even start challenging some of these weekly lows. So we'll see what happens. As of right now, the bulls do look quite good, but not all stocks would be good criteria for the wheel strategy. I only target specific stocks for the wheel strategy, ones that are on pullbacks and ones that are very close to support levels as well. And these stocks also need to have some pretty solid fundamentals, revenue and EPS going to the upside, right? That being said, speaking of some of the strategy rules, let's take a look at the rest. So I'll have you guys take a screenshot of these strategy rules right now, because I won't be going through every single one. There used to be a time on the channel where every week I would spend 10-12 minutes going through this line by line, explaining them individually. But now, just to save time for the videos and spend more time talking about the actual plays and why I like them, I will leave a link down below in the video description to a former video where I explain this for about 10 to 12 minutes. You'll see that down below in the video description under a sentence that says bull market wheel strategy explained. There's a little YouTube icon with the video. Just click on that and you'll watch me go through these wheel rules individually, just for you guys to be able to kind of master the strategy, right? Because the wheel is a very decent strategy overall, but if you do it kind of willy-nilly without any rules, well, you will not have the consistency that we're used to having here on the channel. So pay attention to all these rules individually. They really matter. Highly suggest you guys watch that video down below. It's not that long at all, and it'll just give you a better idea of what exactly we're looking for. So take a screenshot, because now we're going to jump into the top 5 options plays. And for play number 1, well, you're going to see that it's a name that's been recurring on the channel for a few weeks now. And the simple reason is because it's still at a very attractive level. As a matter of fact, several of these top 5 options plays have been recurring for the past few weeks because they're still at very attractive levels. As such, we can continue to play them because we know the wheel strategy is not necessarily a strategy whereby you're looking to chase things perpetually to the upside. It's just not meant for that overall. But what it is meant for is playing stocks that are pulling back into consolidation into very solid areas. So as a result, stock number one, maybe you would have guessed it, maybe not, is going to be AMD. So everybody's favorite or maybe not so favorite semiconductor stock, but I like playing this one. The volatility's been very good. As you can see in the past 4 or 5 weeks, the stock's been relatively range bound in the same levels. Call it the mid to high 150s all the way down to the low 150s. And down below here, sub 150 is an area that I really like playing this stock for a couple key reasons. Number one, it's very large support, 147 down to 133. And at the end of the day, we are just looking for some very nice monthly consolidation. You can call this a monthly breakout and retest of several key supports. You can call it a monthly cup and handle. All that to say, the bulls are looking really good during this backtesting phase. And additionally, the other reason why I love this one, the valuation. At about 150, you're only looking at a 1.3 PEG ratio and a forward price of sales of 8.45, which is not that bad considering the massive amount of growth in revenue and EPS that they'll be having over the next few years. The thesis for AMD, in my opinion, is very clear. It's going to be a doubling of EPS over the next couple of years and also a doubling of revenue. And AMD is arguably going to have some of their best years in the future, which is probably why the chart has been holding up so well and why the price action definitely does favor some action down here in terms of the wheel strategy. I definitely would not mind being assigned at 150 and playing the wheel down there. That being said, the expected move for this stock this week is 153.43, and true to our rules, we want to be selling put options below the expected moves all the time. If you guys don't know where to find the expected move, very easy. Just go to this website right here, barchart.com, type it into Google, right? Just do bar chart expected move and you'll see whatever stock you want. Type in NVIDIA or AMD and you'll come to this page right here. You can either look at the graph, look at the lower price right there, or you can come down to this table and always pay attention to the lower price. You want to be selling options below that lower price because once again, it reduces your odds of being assigned. So although the expected move is down here 153, I really want to be picky and choose to write in the support area to better my chances of, if I am assigned down here, we're more than likely going to get a very nice bounce out of that area. So let's have a look at the options chain together and derive what we can possibly find down there sub maybe 150, right? For the Friday expiry. Now let's have a look at the options chain for AMD. And true to the strategy rules, you'll be looking for about 0.5% ROI. Why 0.5%? Why don't I just go with delta? Well, I'll explain, guys. The 0.5% rule encompasses delta, right? All the stocks that I'm about to show you all have different implied volatility rates. So if you only go with, some people like to go with a pure 20 delta, right? But the problem with the 20 delta is on certain stocks, that's going to be a lot closer to the current share price than other times. But if you want something that encompasses the various moves in delta and that it always is relatively the same amount of safety from the current share price, I like to go with the 0.5% rule across all stocks, and it's very easy to just go through the options chain and kind of do it in your head, right? What I mean by 0.5% is just divide the strike price by 2 in your head. 150 divided by 2 is 75. You're going to be looking for 75 cents here on the bid to make sure you're getting the proper ROI. As you can see, I can do it right here. 0.75 divided by 150. There you go. There's your 0.5% rule. It can make sure that we're getting paid adequately. The problem is if you go any higher than that, well, sure, the premium is a lot juicier, but your chances of being assigned are also very high. If you go lower than that, unfortunately, you're just not making enough money for the capital that you're outlaying for this trade. 0.5% after years and years and years of doing this, about 7-8 years at this point, it's the sweet spot for me, right? It's a conservative amount, but still it's a very decent amount of ROI. If you guys want to be more aggressive, by all means, that's up to you. If you want to be more conservative, that's up to you. But I do believe the 0.5% rule represents a very good balance of the two. So that being said, for this week, you can find the 0.5% rule at 150. Now, 150 is indeed below the expected move and indeed also is coming down into the top end of our support range. However, if on Monday morning, as we've been seeing many times over the past few weeks, if AMD starts off the day red, well, you might be able to get even better than 150. Who knows? Maybe you can get 148, 147. Those would probably be my favorite strikes. I would not mind 150 for this week, but if you're asking me for my all-time sweet spot strikes, 148 down to 145, and who knows, if AMD starts the week off with a 3% red day, you might be able to get even lower. The name of the game here, guys, is on a big red day, you want to get the lowest strike possible for 0.5%. So don't just stay set in stone at one strike price. If you can get lower for that same 0.5%, you may as well do that. Lowers your chances of being assigned, and if you are assigned, you're getting a very good price additionally. So for me this week, 148 down to about 145 or better is the key area that I'm going to be going for. Beautiful support and also very good fundamental valuation down there. Now, stock number 2 as part of the top 5 is going to be Amazon. Amazon, in my opinion, one of the better buys in the market across all of big tech. Now, Amazon is kind of the last remaining stock that is severely lagging the market on a year-to-date basis. Now, that used to be Apple and Google, but you can see what's happened to Google right now, sitting very close to the all-time highs after the DOJ ruling, but Google was lagging for months. Then it was Apple's turn. Apple for a while was down 17, 16, 19% year-to-date, and this all kind of came to an end a few months ago at this point in time. This was the last time that we were playing Apple very aggressively with leap call options and the wheel. We were able to play it for a very long time, and now Apple has just made its way back to its own all-time highs, which leaves us with Amazon. Now, Amazon hasn't really been red, I mean, other than the tariff situation in April when everything was red. Since then, it has been notoriously lagging, and I do believe this is kind of the last one that's going to get picked up by retail traders and institutions as well. So I really want to make the most of it while it's still consolidating in this area, kind of the same zone it's been since July. Now, the expected move on Amazon this week is about 214.13. So we want to be looking to write put options down below into this interim support level, 212 down to 207, looking pretty good. And that's also in line with the 200-day EMA. Now, prior, I was selling puts down here in the lower 220 range, and you can see it's come very, very, very close. As a matter of fact, I actually have some shares now because I went with a somewhat aggressive strike here at 222.5, and now I am the happy beneficiary of having 100 shares of Amazon in the trading portfolio, and I'm really looking forward to selling call options against the position. But also, if Amazon dips a bit lower, I'm not gonna lie, I probably will increase my position as well because I love this company in this location. That being said, can we find some new short put options this week under 214.13, preferably closer to our big support level and the 200-day EMA, 212 down to roughly 205. Let's have a look on the options chain together, shall we, and see what we can actually get on good old Amazon. So Amazon.com, where do we stand right now for the 0.5% rule? Well, if we're looking for the lower 210 range, half of 210 is what? 105, right? So you're gonna be looking for about 105 premium. Now, unfortunately, at 215, there's just too much here. The chance of being assigned is too high, and also it's above the expected move. It's not a bad strike objectively, but it's just a little bit too high for the purposes of the strategy, at least the way that I like to run things. 212.15 is just not offering enough premium. So the one thing that has to happen here is you do have to have a little bit of a pullback, on Amazon early on in the trading week, either Monday or Tuesday. If we can see Amazon pull back here to 18, to 17, perhaps that'll free up the 212.5. But if Amazon has like another 1.5%, 2% down day like they had a couple times last week and comes straight down into our expected move right away, well, you guys know exactly what's going to happen, right? We are going to get the beautiful 210 strikes as well. Who knows? Maybe even the 207.5s. So for me this week, guys, it's one of these strikes as low as we can possibly get with some early week volatility. I really would not mind either of the three. 212 down about 207.5. Fantastic stock. Fantastic level and a very decent valuation to be playing off of as well. That's it for stock number 2. Now, stock number 3 is another one that we've talked about several times on the channel, but we have not been able to play this one as, you know, in a long time, essentially, since their earnings, right? So it's been about a month that we haven't been able to play Affirm. You might remember me playing it a bunch down here, and then when we broke the level, I was playing the back test down here again into support, and then we just kind of ran away with things, and I hadn't touched it in about a month. And now all that's changing, but not because the stock is, not because the company is doing bad or anything. No, just very normal price action. Affirm is looking great, as a matter of fact. It's just a very clear monthly uptrend, and we're just going for a little bit of a back test down here, coming back into the same area that we were playing prior. $70 down to about 63. That being said, we covered their earnings last month on the channel, and that was the reason that they popped up to around $100. Mind you, that's exactly where I sold my leap call options as well, that we made a lot of money on. But now it might just be another opportunity to play the wheel on this one if it's the type of company that you like. The valuation after their earnings at $80 was about a 1.52 peg and a 6.75 price to sales, which is not too bad considering how fast they're growing revenue, how fast they're growing EPS, and all the amount of good things that they showed us on their earnings releases as well. You can go back and watch that on the channel too, because I don't have necessarily 10 minutes to do a full earnings breakdown of Affirm, but their fundamentals are looking good, and I do enjoy the price action, but I also enjoy the volatility. We can get some strikes pretty far away from the market on this one because the implied volatility on the stock is pretty good. Now, the support level once again is 70 down to about 62. The expected move this week is 72.08. Let's go shopping together and see, can we find some premiums further down below than that? So let's take a look at Affirm real quick. So Affirm down here, if we are looking for under the expected move of 72.08, we'll be looking for 0.5%. Where's 0.5%? Well, half of roughly 70 is 35, right? So as of right now, the premium that you can get while respecting the strategy rules is a 69 strike for about 35 cents. Very good. For you Delta guys out there, that's an 11 Delta. Only 11% probabilities of actually being assigned, which is very good, right? Now, that being said, in the event that a firm continues its momentum slide into Monday, you may be able to even get a better strike than that, maybe even the mid-60s, which would really be sweet. Having a mid-60s strike, it's directly into support, and I assume if it just straight flushes down there at that point as well, you might get the ever so rare confluence of having daily oversold conditions into a nice support level, which means that a bounce is more than likely to occur out of that zone. So for me this week, guys, you know, anything under 70, call it 69 down to 65, is really good for a firm if it's the type of stock that you want to play, and if you want to use short puts as the mechanism to kind of play this pullback on the stock. So that was stock number 4. That was stock number 3. Stock number 4 for you guys is going to be one that people love playing. It's going to be SoFi. So SoFi having a bit of a pullback, but the bulls have been protecting this 12 EMA on the daily really well recently, right? However, when SoFi has these quick volatile moves to the downside, sometimes in a single morning before the bulls buy the dip, it's usually a nice opportunity to throw some put options out there, short put options, and try to target this level down here, guys. 24.5, let's call it 25, right? I mean, it's not actually 25, but all right, no, never mind. Let's call it actually 24.5. 24.5 down to about 22.5. That's the previous most of the previous highs from back in 2021. And the next big area of confluence that we have, right? A lot of the moving averages, the weekly 12 EMA is down there. You have a lot of price action in that level when the bulls were being challenged, trying to break into it. Then they used it for some back tests a few times, and now we've kind of broken away from there. However, pay attention to the red days this week, guys. If you see a nice 2, 3, 4% red day to start off Monday or Tuesday morning, you might be able to find the exact same strikes that I did last week. I was able to find a 24 short put for my account last week. If you take a look, they're all the way down here. We took them on Thursday, essentially, right? We got the 24 puts for 15 cents. So it can be done. You can find really low strikes when SoFi is down a decent amount. Actually, as a matter of fact, I think I took these on Friday. Never mind. I'm almost one day ahead of you guys anyways, since I'm in Asia right now, right? That being said, SoFi, very interesting. The valuation down there around 25 is also not that bad. A 9 price to sales, a 1.61 PEG ratio, which is not that bad considering the revenue and EPS growth. And also, it's the biggest area of technical support that you do have. So keep that in mind. The expected move for the week is 26.55. Let's go shopping on SoFi stock to see, can we find anything below 26.55? Let's have a look, shall we? So moving into SoFi coming into here, if we're looking for 0.5%, half of 25 is roughly 12.5 cents. Perfect. You guys are getting the gist of this, right? as of right now, only available at 25.5, which is not a bad strike, but you guys can clearly see what's going on here, right? We can get significantly below the expected move, even with the current price action. So imagine what happens if you find SoFi down 2-3% to start off the week. You might be able to find the exact same strikes as me, maybe 24.5, maybe 24, which brings you right down into support in the event that you wanted to play the wheel down there. I think that's the more optimal level to be targeting, all things considered, for SoFi. That's stock number 4. And now stock number 5 is going to be another stock that you guys know very well. It's going to be Airbnb. So Airbnb, few reasons why I like the stock. Number 1 has to be this 3-year area of support at this time, right? Very clear location of support, and that support level starts down here at about 118, 117, and continues down to the low 100s. But as you can see several times in the last, roughly call it 12 to 14 months at this point, the bulls have bought the dip fairly aggressively every time we kind of poke our noses down into there. Now, that being said, there's nothing wrong with this company at all. At 120, they have a pretty fair valuation, only a 1.47 PEG ratio, a 5.3% free cash flow yield. They're starting to really ramp up the free cash flow and ramp up the net margins, and they're growing revenue and EPS at very good clips. It's just this company has been somewhat out of favor, although that travel has been very resilient and they've been putting up good numbers. So the company is improving fundamentals, but the stock price has stayed roughly flat, which is one of the reasons why I do like to play the wheel on this one, especially down below here. Now, the expected move for the week on Airbnb is 120.4, but I want to be getting a little bit greedy and see if I can get down there 118, 117. So let's go see what is available right now on the options chain, or maybe might we have to wait for a red day or two. So let's have a look right here on good old Airbnb stock. Go to October the 3rd for the Friday session, and around the 120 range, you're of course going to be looking for 60 cents, which is your 0.5% rule. That being said, it's literally available exactly at 120, which, let's be honest, is the expected move. So I wouldn't be that upset with the 120. As a matter of fact, I'd be fine with that. However, if Airbnb starts off the week with a red day, like a Monday or a Tuesday session, and dips back down to where it was on Thursday, like 122, 121, 120, well, you guys know exactly what's going to happen, right? It's going to free up strike prices down here, 118, 117, 115, and that's where I really start to get a bit more interested in Airbnb. As I said, there's nothing wrong with 120, but if we're really trying to be pinpoint here with our areas, 118, 117 is where I just won't hesitate at all. So I'll be paying attention to any red that we might have early on the week for this phenomenal company at a very decent price right now. And that wraps up all the top 5 options plays for the week. So hopefully you guys were able to get some ideas from that, or at least understand how I choose my plays. That way, if you guys wanted to play names that have more implied volatility, or just other names or cheaper stocks or things of that nature, well, at least I'm giving you guys some good guidelines as to how I kind of pick my plays. It's a little bit of technical analysis, but it's a lot of as well some fundamental analysis too, and if the stock price makes sense at the level that you're looking to play, and if it's a high quality company for you, of course, right? So keep that in mind. Now it's time for the 10 bonus plays. For the bonus plays, it's not because they're not as good as the top 5. It's just sometimes they're a bit more volatile, and also other times they might not be ready just yet. You may need more than one day of consolidation to bring you into the level, but they're names that I constantly keep very close on the watch list for a given week, because you guys know, right? We play a lot of different names, even outside of the top 5. I have so many names on the watch list right here, and there's so many names that if they come into certain levels on big red days, they'll be fair game for me, right? Take a look here at some of the plays that we made last week. I mean, we got a bunch of them. We were playing Toast, Rocket Mortgage, played some SoFi, we played some NVDL, 2 times NVIDIA, some Open Door, some BMNR, even some Intel was played. Got assigned a few plays as well that I played semi-aggressively, right? But that being said, I'm fine with those. And so many names that are currently running that you guys don't even see already, because I didn't show you the portfolio update from the Friday session. But let's say we go to here. I'll just show you guys some of the ones that we still have running. We have Affirms, right? We have I could have just showed you the portfolio, right? So may as well just show you the portfolio. Portfolio is right here, essentially. So we got the Affirms, we got the Oscars, we got the Resolves, we got the Sentinel Ones. As I said, I got the SoFis, got the SOXLs, and so many others that were closed throughout the week. So my list of stocks is very deep and very wide, but there's some that I'm keeping closer than others in any given week, and that's going to be the nature of the top 10 or the 10 bonus plays right now. So the bonus plays, I'll divide it into 4 sections. 4 growth plays, number 1. After that, 2 value plays, because I know some of you guys prefer playing the value stocks instead of the tech stocks, and that's completely fine. Thereafter, we have 2 small account plays, and then 2 very big account plays as well, for those of you that have very large accounts and who want to play stocks that trade around $300, $400, $500 per share ranges, right? So that being said, let's jump into the bonus plays right away. I will not be giving you guys the expected moves. You guys are now professionals at doing that, but I'll give you the levels that I'm looking to play and why. So starting the bonus plays right now, 4 growth stocks. Number 1 is going to be the classic BITX, 2 times leverage Bitcoin ETF. Now that Bitcoin has been pulling back into our desired support location, I've been an even bigger fan of playing this one, but this is not for everybody. It's only for people who enjoy playing the Bitcoin trade. 107 down to about 97 is the expected support range for Bitcoin that it's pulling closely into. It's a very, very clear breakout retest here on the monthly, right? If I just pull up the actual chart of Bitcoin that I use more often with a couple more levels, you'll see it even better, right? Literally just a monthly breakout. Now we're just back testing one of the big support levels, and the bottom end of that would be the target key location. That, in terms of BITX, is roughly translated to a mid 40s to low 40s strike. So BITX could be very interesting. We do not have to play it too close. This is 2 times leverage, so don't get seduced by the premium super close to the market, right? No, you can play this one with some distance. And as I said, 45 down to 40 bucks would be the next level that I'm looking to play on this one. Stock number 2 is going to be SOXL, 3 times leveraged semiconductor play. This one, I love it down here, 27 down to 23. This little pocket of support, if you want to know what that translates to in terms of the big one here, in terms of the SOXX, that would be the interim support level here, 250 all the way down to roughly the big one down here, 236. So if we're looking to play that type of pullback on the SOXX, but using SOXL as our favorite tool to do that, you can get all the way down here. And you guys saw, I mean, when SOXL, in terms of on the Thursday session, excuse me, it wasn't on Friday, it was on Thursday, when it was all the way down here, I got pretty close to the bottom on this one. And just look, guys, at 31.5 on a Thursday, for the following Friday, I was able to get my 0.5% rule, 15 cents for a 24 strike. 24 would have been huge, especially from the Thursday lows, right? Just because of the increase in the VIX, that would have been another 24% lower, which means the SOX would have had to go down 8% during the following week. Somewhat unlikely, and also a backtest of support. So just pay attention to SOXL. When you see those big red days, you'd be surprised at the distance that you can get on some of those strikes. Stock number 3 is going to be another very volatile name, guys, but one that I do enjoy playing. It's going to be the good old CoreWeave. CoreWeave down here, look for the lower 100s. I'm talking like 105, 104, even $100 strikes. And you might think, no, there's no chance. Stock's 120. You can't possibly be getting the 100 strikes for next week for 0.5%, which roughly is, I don't know, 17% in a week. Well, as a matter of fact, when you have the increases in the VIX, you'd be surprised what you can get on some of these stocks. You do not have to play them super close. A lot of people trap themselves by getting seduced by the premium up here. They'll see $3 for the 115s and be like, whoa, I can get 300 bucks. That's like 2.7% for a single week of trading. Yeah, but the chance of being assigned is also very high, and the delta is very high as well. I, for one, can be somewhat conservative with this one if I want to, if that's the way that I play things, right? I can go down here to 100 bucks and get 50 cents, which is 0.5% for the week, and have a good amount of distance on that one too. So CoreWeave down here, lower 100s into the bottom end of support down there. Pretty big fan, considering that that's a very nice level of support, and also considering the longer term bull thesis, or even just normal thesis for CoreWeave, does show phenomenal share price appreciation in the future. But this one might just be a sympathy play to the downside, just because other names like NBIS and Iris Energy have ran an absolute ton recently. If those names consolidate, I mean, CoreWeave from the lows has ran a decent amount as well, right? From the bottom, it doesn't look like that much because it's so volatile. From the bottom to the top, though, that was 63%. It doesn't look like it, I know, but it was a huge move, right? So if this entire niche of the data center / cloud play, or rather the whole segment, right, starts to pull back, I'm a big fan of playing CoreWeave down there. And now lastly, moving on to CLH, the last one. This one was a phenomenal area, guys. We talked about this one last week. I was saying, watch for the back test, because all it is in essence is just a nice weekly uptrend coming for a breakout and retest section right there. This area was a huge area of support, talking about roughly 52 down about 45. Not a bad area for some back tests if we're looking to play it patiently on some red days and target some of these lows sub 50, like 47, 46 type of plays. And there was a lot of them available last week as well at around 55 where it stands now. The valuation is not too bad, but shave off another 10, 12% where I'm writing my strikes. Valuation becomes really manageable, and I would not mind being assigned some CALH down there, especially not just coming off of a $62 rally right there. So very nice. Those are 4 growth plays that I have for you guys this week. Now, I know there's many other companies that I could throw out there, the APLDs of the world, all the other ones that you guys sometimes reference in the comment section, but I'm just giving you guys some of my go-to plays because sometimes the other ones are a bit, I know some of you guys play moment, like you guys will play APLD and you just won't care, right? You'll see this massive move up and you'll just keep playing super close, super close, super close. And then if you get assigned, you won't care. You'll just start DCA, DCA, DCA. That's fine, you know what I mean? But it's not for everybody. Keep in mind, these videos, I have to really do things in a very broad fashion. And I have to also find like, what's the best risk to reward trade-off for most people's average risk tolerance. But of course, if you guys want to throw me your suggestions down in the comment section, for sure, I've probably done them before myself, especially with our Discord group. So feel free to share your favorite plays down below the comment section too. Now, 2 value names I'm going to throw at you guys for some of you people that like playing value names overall, which is also decent, right? One of them is going to be Coca-Cola. Everybody knows about Coca-Cola. It's just that sometimes it's very rare to find this one for a wheel opportunity. And also, it doesn't have the best implied volatility, let's be honest. So you really have to be on top of a level that you want to play. And in the event that you are assigned, Coca-Cola does give a very nice 3% dividend. And it's a very solid stock. I'm pretty sure not many people would mind being assigned of Coca-Cola. Sure, the shares might just sit around there for a while, at which point you can sell covered call premium on them and get some dividends, but at least it's not a very volatile stock. Right now, Coca-Cola is pulling back into finally 65 down to 62, which has been a very nice area of prior resistance for the market, prior area of support for the market as well. It's the 200 weekly EMA down here into 63. So if I were looking for some value names, I would definitely not be opposed to playing Coca-Cola 65, 64, 63, and have a little bit of a position going in this location down there. And the second stock, for similar reasons, is Canadian Pacific. Very solid railroad company. There is nothing wrong with this stock. It's been consolidating for 4 years, guys. However, what have the fundamentals been doing for the past 4 years? Well, good question. I'll show you. The fundamentals have only been improving. So this is just one massive accumulation range. And look what's happening to EPS in the next 4 years. Look what's happening to revenue as well. Very solid improvements. Now, the bias on this one, we are eventually going to get the breakout, right? It's not going to break down off of improving fundamentals when this stock is essentially kind of a monopoly for what it does at this point in time. Not a monopoly, it's more like a duopoly, right, with Union Pacific, but still phenomenal area of support down here, 72.5 down to 68. So I would not mind, guys. I mean, CP only has monthly options, but right now I would not mind throwing a couple contracts here at the 72.5. It's very close, but at least you know you're playing an extremely solid level for an extremely solid company and get some good premium to do so in the process, despite it being more of a value stock. Now, 2 plays for small accounts at this point in time. This one that I've been bringing up almost every single week for like 2 months at this point, because it's still in the same level, right? Sentinel-1, phenomenal small cap, it's not a small cap stock, but it's a small priced stock, right? $18 per share, not very expensive to play. Revenue and EPS growth, very solid. We covered their earnings August 28th. They had very good earnings overall. They're improving profitability, and also the base and bull case scenarios for 2028 shows some very nice, for even 2026, shows some very nice share price appreciation potential if cybersecurity continues to be as favorable as it is today. So if I'm looking to play Sentinel-1, I keep playing in the same exact location, guys. $17.50 down to like $16. Beautiful pocket, decent valuation for the company. There's nothing wrong with the company. If anything, it's a good acquisition target for some of the bigger players in cyber right now. And this whole area has been kind of the bottom end of the support range for essentially the past 2 years. I enjoy playing it down there. And the other one that I like playing, because it's somewhat range bound and also very volatile, is Oscar Health. Now, we all know that the healthcare insurance companies have not been the most favorable trade this year, but at least this one has some good volatility and has established a very clear range. Over the past year worth of trading, they are improving their sales pipeline, improving their fundamentals every quarter, not looking too bad. So whenever we see these big and rapid breakouts, now the violent back test that they do sometimes, Oscar Health likes throwing us some 4, 5, 6% red day candles. Whenever that happens, we can usually get some pretty decent premium down here, $15.50 all the way down to about $13. So pay attention to those premiums. You'd be surprised. More often than not, they kind of show up once every week, or at least every 2 weeks at this point. We've been playing it on and off for essentially like a month, 2 months at this point in time. And you'll see that I have once again another contract going for this week. I got the 15.5s. I got this one last Thursday during the volatility for about 15 cents. We're making about 1% there, a little bit more aggressive. You could have gone lower for the 15 strike. Nothing wrong about that. And that's it for our small plays. And now for 2 plays for the big ones, guys. For those of you with big accounts that are looking for some high quality names, and we know sometimes the high quality names sometimes are associated more with a higher share price as well, just because those companies don't usually split their stocks or whatnot. One of them is one that I've been bringing up on the channel now, guys. I don't know how many times we've played Visa this year, but it must be like at least a dozen at this point in time. And the thesis has not changed. Phenomenal company. I mean, we did their earnings breakdown back in July. Phenomenal company. Nothing wrong here at all. If anything, it's backtesting its 12 EMA on the monthly time frame. You can see how many times Visa tests its 12-month EMA in a bull market. This is 2022 bear market. This is COVID. You go back 15 years and you tell me, is buying Visa at the 12 EMA a good proposition? Yeah. Can it be bumpy down there? Sure. But do I want to play it in this location? Absolutely. 340 to 330, in my opinion, very easy section to play Visa in. And worst case scenario, what happens? You have to buy 100 shares of Visa. I'm pretty sure nobody would be upset about that. But not financial advice, of course. If you don't like it, then don't take it. And stock number 2 is going to be another one that's been, well, this not another one. Visa hasn't been selling off this much, but one that sold off a lot into a phenomenal area of support at the current time right now. SPGI. Now, this is prior all-time highs from 2021, prior support from 2024, and a very nice area of consolidation, and also the 26 EMA on the monthly, which, unless you're in a big bear market like 2022, rarely ever gets tested. And when it does, it's usually a decent buying opportunity. Couple that with the fact that it's in daily oversold conditions, the likes of which we have not seen since the bear market of 2022. 3 times we saw this in 2022, and all 3 times the bottom was closer than not. So I really enjoy playing this one with my big account on SPGI. At the current stage, 480 down to about 460 is the support location that I would be very interested to continue to play this one with the wheel strategy. Phenomenal stock, great level, and decent oversold conditions on the short-term timeframes as well. And with that, that wraps up all the options plays that I have for you guys this week. Hopefully you guys are able to get inspired from some of them, right? Or maybe take what I'm showing you and throw your own personal twist onto it. And as I said, if you guys have any questions, you can always leave them down below in the comments section. I'd be more than happy to help you out with the strategy. And or if you have any suggestions of plays that you are also running yourself that you want to share with everybody, feel free to comment down below. I always love hearing about people's ideas. That being said, guys, that's it for today's video. Hopefully you enjoyed. If you did enjoy, consider dropping a like. Would appreciate it for the growth of the channel. Consider subscribing if you're new to the channel as well. Would love to have you back here. We do these videos every Sunday in preparation for the upcoming week. And last but not least, if you wanted to join a community of traders and investors such as yourself, over 250 members in that community right now, where we specialize in running the wheel strategy every single week. But not only the wheel strategy, we run a whole bunch of other option strategies, a lot of long directional strategies like leap options, call debit spreads, credit spreads, things of that nature too, and swing trades with shares, of course. You might consider joining our trading community. In the community, you'll get access to all of my personal trades as well, whether it's the wheel trades, some of the more aggressive wheel trades that I don't necessarily show so much on YouTube, some of the directional trades like the short-term call debit spreads, the leap call options, which we've been making a killing on this year so far. Here's just a lot of our trades that we've made in the past few months. The green little circles or green little check marks are wins. The red little circles are losses. I really like to keep my wins larger and my losses very tiny. So you can clearly see that one type of trade definitely outweighs the other, but no guarantees. Can't really make guarantees, of course, but these are all my trades, always transparent with the wins and the losses. You get access to all those, but you get access to our private morning live streams as well, whereby every Monday to Friday, I stream live for about 2-3 hours at the open, where I trade live, but I also take all your questions in real time. It's a really good area to interact with me personally, ask me questions on your stocks, your options, your long-term portfolios, and I can help you out in real time with the charts, with the options chain, and give you a very detailed explanation. If you're not there, the live streams are recorded, and you can also ask me all your questions in our chat rooms throughout the day, and I'm very fast to answer. In the event you also wanted access to our private video section, all my educational content, guys, technical analysis, fundamental analysis, how to build a long-term portfolio, how to structure a trading account depending on tolerance, depending on the account size, all the strategies as well. More than one wheel strategy in there, because there's variants of the wheel strategy, of course. My leap call contract strategy, all my strategy educational content is in there for the Discord members, some things that I don't show on YouTube. And last but not least, you get to copy paste all of my charts, all of these charts with all the support resistance areas, all of the earnings breakdowns, and all of the watch lists, especially my options watch list that I use every single week. It's just an added bonus for the members. Literally 10-15 seconds, you can copy paste all these charts, all the watch lists. It's super easy, just something extra that I threw in there for the members, and they appreciate it a lot. So that's pretty much most of the things that you guys get in the Discord. If any of that interests you, as I said, the link to the Discord is down below in the video description. Looking forward to seeing many of you in there soon. We have a lot of fun in there day in, day out, so it'd be a pleasure to welcome you to the community. And if not, well, I guess I'll see you right back here on the channel, guys. That's it for me. Have a great rest of your Sunday. Hopefully you guys crush it in the market this week with your trades. Take care and peace.